Tariffs are something that we called out in our risks to the market going into this year. And I think it's interesting that we're finally getting that implementation, that conversation. It's really coming into fruition. And markets are dealing with that. We're dealing with that as investors. And it's going to be really interesting to see how it develops. A lot has happened already in just a few short weeks.
Yeah, exactly. And to that point, we knew coming into this that the administration, that Trump was very serious about tariffs. We knew like that was a big policy stance of his. So we knew to expect them, but we didn't really know what to expect as far as, the breadth or really just, the severity of them, breadth, number of countries, or severity on each individual one. And we're starting to get some clarity around that. We're starting to see what has been proposed and what, kind of that's shaping into.
Right. And I think it's important for our audience to understand that this is obviously a moving target. As of recording, already a lot has transpired just, in the previous couple of days, since we're recording this episode. So this is going to be a shifting target, something that we'll continue bringing up as we talk about its implications for markets. But at least as far as what has happened most recently, I mean, we're talking about our two biggest trade partners, and that is Mexico and Canada. And so those two countries have surpassed China as our biggest trading partners now. And a lot of that was because of the USMCA agreement under the first Trump administration. And now it's interesting to see this proposed tariff situation against these two countries who are our biggest trading partners. And so the way that it's been structured, or at least proposed, and what was going to go into place before kind of a final hour, save by the Canadian administration and Mexican administration, was 25%, essentially blanket tariffs on both Mexico and Canada. Now, there was an exception for Canadian energy resources. That was only going to be a 10% tariff, but essentially across the board, which is extremely substantial given the amount of goods that flow into the United States from Mexico and Canada and back and forth across our borders.
Yeah, and like you said, this has been developing very rapidly because the same day, really, that they were supposed to go into effect, you had a lot of conversations with the Mexican and Canadian governments and, really the same kind of outcome for both is that tariffs got delayed a month in exchange for additional troop presence at the border. Both Mexico and Canada have committed to 10,000 National Guard or equivalent troops, security forces at their respective borders in response to this. And that has gotten those tariffs pushed out a month, but we'll see what that turns into when March comes.
Right. And I think that's the really interesting piece of this is that these tariffs are geared towards border security. It's not a trading fairness situation. We'll talk about this maybe a little bit later in the episode, or certainly on future episodes as we get new tariffs coming across the board. But right now it's about, hey, the Trump administration is very serious about securing the border. They want Mexico and Canada to, up their defense spending, especially when it comes to border security, and prevent the flow of illegal drugs like fentanyl across the US border. And so that's really what these are geared towards, because at the end of the day, the United States wants to have good trade relations with Mexico and Canada. The reason why we became such big trading partners with them in the first place is, of course, because of their proximity, but also because we were trying to reshore supply chains away from China in the first place. So it's important that while Trump does want a lot of those supply chains relocated within the US, more industrial production within the United States, we still are going to have pretty good trade relations with Canada and Mexico in the meantime, until some more industrial production can take place in the United States. And then even once you are at kind of your manufacturing end game within the US, you're going to rely on Mexico and Canada for natural resources, for other kinds of production. That's going to create a better economy for all three of our countries.
Well, and that's an interesting piece of context that I want to, just call out here, is that these negotiations are going to look very different than future tariff negotiations will. Mexico and Canada are friends. Like, they're very friendly countries. We do a lot of, it's very mutually beneficial to have trade between them. And, we're, like you said, each other's biggest trading partners. And so that's huge amounts of dollars. And so, we're seeing different things with these than we probably will in the future. As we'll get to China in a minute, those negotiations are going to look very different than what we saw with Mexico and Canada. Whenever this news came out, Canada, immediately followed up with a 25% retaliatory tariff against the US. And, Mexico was going to do something similar until we could, sift through and kind of get to the heart of the issue. I think we're going to see, a little bit stronger posturing from other countries.
Yeah, that's going to be interesting to see. I think to your point, the point of the trade negotiations is very different. And that's where China comes into play as well. So that's kind of the third leg of these most recent tariff proposals, was 10% additional tariffs on China. Of course, the Trump administration tariffed China very heavily under his first administration. That carried through the Biden administration. And now they're proposing 10% additional tariffs on top of that. Now, it actually seems like President Xi is willing to negotiate this time around, because the retaliatory tariffs that China decided to put on the United States are fairly menial. You're talking on, it was only, I think only 5 billion of imported goods and on some US energy. They're also restricting some rare earth exports to the United States, but really in the grand scheme of things, not big levy of tariffs back against the US. And they're waiting until February 10th in order to have these released on the United States. So you're kind of already seeing that, hey, there's going to be some negotiating, some phone calls happening between Trump and Xi to see if they can reach some sort of agreement the same or similar way that Canada and Mexico did. Now, for those, of course, they got pushed 30 days out. And so it's shown that the Trump administration is willing to, if they get the right concessions, work with these countries in order to prevent, total implementation of these tariffs.
Yeah, and China's a really interesting one here because it is kind of an adversarial relationship. But like you said, they seem to be wanting to come to the table and figure something out. And I think that'd be really good for both countries, my personal opinion here. But I think having some form of, better trade alignment would make a lot of sense and like help both countries move forward kind of hand in hand a little bit more. I think it's gonna be a long time before we're really hand in hand with China saying kumbaya, but every step in that direction is, really good for both countries. And given China's current economic situation, they really haven't really come out of COVID. They came out of COVID lockdowns and then immediately faced a big housing crisis, housing issues, and broad economic pain over there. So I think that's kind of prompting them to be a little bit more amenable to conversations, but definitely watching that to see how it turns out.
Yeah, I mean, I think you make a great point there, because whenever we talk about market risks, especially recently in the last 2-3 years, I mean, geopolitical risk has been pretty close to the top of that list. And that's primarily coming from China. So if you can kind of remove that risk or back it off to some extent, like we said, if trade relations can get a little bit better, maybe China is a better actor on the world stage, then that can become a more comfortable situation as far as the implications for markets go. But right now, obviously, still a big risk, but something that is playing into all this. And I think that kind of leads us into the broader economic implications of tariffs as a whole. I think the reason the market was very concerned about tariffs and took a downturn when it looked like 25% across the board tariffs were going to be implemented was because fundamentally tariffs will increase prices. And especially if you're talking about your two largest trade partners, I mean, there's something like $200 billion worth of goods are imported to the United States from Canada and Mexico. So that means, substantial rise in prices on those goods if you're talking about 25% blanket tariffs. So that's going to hit your end consumer. And we're in a situation where the market's already concerned about inflating prices. And that's just something that we're dealing with as investors. So especially at a time when you have an inflation fight that we're trying to win, it creates a sticky situation if tariffs get implemented and prices rise for US producers and for consumers.
Yeah. Great point there with inflation. I mean, it's with tariffs, it's kind of more of a one-time increase in inflation. It's not like a monthly compounding issue, but 25% tariffs are huge. And even if you include like substitutes or, the producers share some of the costs with the consumers, and you start looking at closer to 8 to 10% estimates, that's still a huge increase in prices immediately. That's not, over a year. That's not, over several months. That's more or less immediate once these get enacted. Even as a one-time thing, that is big. And looking at the past few years of high inflation, price levels are about 20% higher than they were just a few years ago. And so adding another 8 to 10% on top of that would be pretty big.
And I think it's important to note too that you're talking about all cross-border transactions. So especially for manufacturers, if there are parts in Mexico that make their way to the United States, and then that next cycle in the supply chain goes back to Mexico or to Canada, then comes back across the border, you're talking about a compounding effect of those tariffs. So every single time that good, it may not be finished yet. Every time it's crossing the border, it's going to get tariffed again. So you can have some things that while the very last tariff getting it into the United States is 25%, it may have happened already 2, 3, 4 times before. So that can add pretty substantial costs to the manufacturing process, which I think is important to note.
Oh yeah, no, that's a great point, because that might sound immediately like kind of inefficient, but with the current trade relationship that we have with the USMCA, it's allowed for people to set up, those cross-border supply chains, especially in the automotive industry. A lot of that goes from the US to Mexico back and forth several times before you have a finished vehicle. And so we saw a lot of those auto companies really tank off of this news. They've recovered a little bit after it's, kind of gone fleshed out a little bit, but people realize that they're uniquely, susceptible to all of this.
Right. And I think that's going to get into where we think the goals of the administration are. I think at the end of the day, they're not looking to necessarily hamper U.S. economic growth. And of course, we know that Trump uses the stock market as a slight barometer for how well he's performing as president, which is a little bit ironic, but is how he views how well he's doing under the administration, how pro-business he is. Because the other impact of tariffs is that when companies are trying to make these supply chain decisions and they're unsure of what tariffs are going to look like in the next month, 6 months, 12 months, it's going to be hard for them to make capital expenditures, invest in new manufacturing, whether that's in the US or Mexico or Canada. And so that kind of slows down those dollars being spent by corporations. And what we don't want to lose is the CapEx spend from these groups in the United States, because that's what fuels so much economic growth in the first place.
And I think there is also, worth talking about the bright side of all of this. There are obviously benefits and reasons that Donald Trump wants to pursue this tariff policy. And we've already seen that play out a bit. Clearly, at least a portion of this is as a negotiating tactic. We've seen lots of conversations over previous days and weeks on, speculation. Is this all negotiating? Does he want some tariffs? Is he really just after tariff revenue? I think this goes a lot more in that first camp of at least showing that a large portion of it is negotiating tactic, because he has already gotten a lot of commitments from the US and Mexico, or from Mexico and Canada, to secure their respective borders and stop that illegal flow of drugs and immigration. And so I think that goes, towards Trump's priorities and is pursuing those initiatives. And so I think that's kind of a big sigh of relief to a lot of the markets. Obviously, we're still watching how this plays out, but I think there are some advantages to the tariff policy that's being implemented right now.
Yeah, I mean, an extent of this goes back to Trump's whole art of the deal kind of mentality. He knows the position that the United States holds. We're a much more important trading partner to Canada and to Mexico than they are to us necessarily. Now, like we mentioned earlier, we want a symbiotic relationship. We want to have a good trade relation with these countries. But if there's something that the Trump administration feels that those countries should be doing that they're not, Trump knows that he can implement these tariffs or threaten with these tariffs in order to get some form of concessions. Now, you don't want to take that too far necessarily, but I mean, to the point, Mexico's 1/3 of Mexico's GDP is via exports, and 80% of those go to the United States. So you're talking about a hit to their economy that they just cannot suffer. And so at the end of the day, you know that they're going to want to find some kind of compromise. And almost certainly the thought wasn't that 25% blanket tariffs were going to be the end game there.
And then additionally to that is that it kind of furthers Trump's push to move a lot of manufacturing back to the US. You mentioned this earlier. Does have pros and cons. We want a lot of that in Canada and Mexico as well. But if there is business, uncertainty, then that might prompt people to just go ahead and set up operations in the US. Maybe it's not a whole lot more expensive here, but at least they're insulated from any potential tariff risk. If that's long-term feasible is kind of still up for debate, because there are certain things that Mexico and Canada are just better at producing, specifically in Mexico with, labor prices. That's why so much automotive manufacturing is down there. But bringing back to the US what we can is obviously a huge, huge point for Donald Trump's presidency. And then I want one more thing that I want to touch on that I mentioned earlier is that this is very different with Canada and Mexico because of the USMCA, we have very low tariffs on each other. Mexico and the US are both about 0% on each other. Canada actually has slight tariffs on some of our exports, some of their imports from us, but it turns into a whole different scenario when we start talking about other countries around the world. The US is constantly being over tariffed against us, which is really interesting. If you look at a chart on US tariffs versus to other countries versus other countries' tariffs on US products, the entire rest of the world exists below that equilibrium line. And so everyone else has higher tariffs on us than we have on them. And, in the EU, that ranges from about equal in some countries to pretty disproportionate. And then further from that, you have like Korea, especially. We have very minimal tariffs on their imports, but they have big tariffs on us. So it's different with US and with Canada and Mexico, but, it's definitely something different to watch once we start talking about the rest of the world.
Right. And I think that brings us to where we're going on a go forward basis. These are going to be developing. It's not going to end with Canada, Mexico, and China. It's probably going to expand to many other areas of the world. And to your point, these tariff negotiations are going to look very different than this round did. But it's going to be a developing story. And I think that leaves us with, how do we react as investors? Well, we're going to get these headline tape bombs that may swing the markets. And what we have to do as rational, logical, patient investors is sometimes take advantage of these swings in equities, because the market may overreact on a headline, whereas we realize that the end game is not maybe as drastic as what the headline says. So that can lead itself to investment potential, to benefits of putting money to work. Or you have to realize, hey, if these tariffs are going to get implemented, which industries, which sectors of the economy are going to get most impacted? Obviously, there's some areas of the market outside of the really tariff influence, things like financials, things like healthcare, a lot of the domestic industries within the United States that don't really touch borders or go international. And so I think that's kind of where that leaves us. But it's really going to be interesting to track how tariffs evolve over the coming days of the Trump administration. And we really just got our first, big taste of that.
Yeah, exactly. To your point, some of it you have to just look through the news, got to be long-term investors, because the markets are going to swing around. It's, on these tape bombs, like you said. But along with that, it presents opportunities to use it tactically. or just look through it, be a long-term investor and look at the actual impacts of it, the actual sectors, the actual, is this to be negotiated or is this like final news? So, I think one piece of advice kind of for the listeners is if you hear something like this, take a minute, digest it first, because we saw the markets do the opposite of that the other day, where tariffs were announced. Then there's a news leak that they were delayed that turned out to be false. But, just in the span of a few hours, we had very conflicting reports coming out and the markets whipsawing back and forth based on them. So if you see the markets doing something crazy, take a moment. A lot of this is going to be short-term noise.
Absolutely. And I think that's just something that's going to continue happening. So don't be surprised when the next round of tariff negotiations comes up. It's likely going to be in Europe, or 30 days from now, coming up on those deadlines with Canada and Mexico. You may have some news around that. As long-term investors, got to wait out that volatility and see where the market goes. But I feel like we hopefully gave our listeners a lot to think about today. Tariffs are certainly interesting. I love the combination of the financial and investment implications with the broader economic view, in a more traditional sense. And it's just something that we're going to, keep tracking moving forward.
Yeah, exactly. Thanks, Victor.